Yeah, I think that when I look at emerging markets and Asia in particular, the bear market we've seen this year, the price declines really are starting to price in, I think, an outlook that is much worse than we're expecting. That means that there's opportunities in Asian markets to rebound. They've had a tough time this year, right? They've been impacted by the US dollar increasing. They've been impacted by rates trending higher. And up until Friday, of course, they were impacted by oil prices moving higher. And that's really pushed markets down. And of course, you add on top of that, there's the uncertainty around China and the US. And so I think that they have fallen too far. And there are certainly opportunities looking at over 2019 for emerging markets in Asia in particular.
And Isaac, you mentioned the strong dollar. I mean, one of the premises here from the Morgan Stanley note is that the US dollar will peak next year. I mean, what is your outlook from where we sit today with the greenback?
Yeah, it's been a very strong run for the US dollar up until this year, and that's been driven by widening interest rate differentials with the rest of the world and a fairly hawkish Fed that's said time and time again that they're going to keep raising rates over 2019. And I think that currently the US dollar is pricing in most of that news. So from our perspective, we think that there's limited upside scope for the US dollar from here, where we're not expecting it to rally much further. It's hard to tell exactly when there's going to be a turning point. But if we look out over 2019, we're expecting the US dollar to start to ease off and just come down a little bit as those interest rate differentials with the rest of the world start to narrow a little bit or stabilize.
Isaac, given the weakness we've seen in U.S. equities, I mean, a tough short week, I should say, last week, but do you think if this volatility, if the momentum to the downside continues, would that be enough for the Fed to pause?
I think that there would be a likelihood that the Fed would blink and just they've got scope to hold back on one of their hikes next year if equities continued to decline. But that's not really our base case. We think US equities will rally over 2019. We think the outlook for the US economy is quite strong. We think growth is likely to be above potential. And that implies that inflation is likely to be around the Fed's target. And under those set of circumstances, we think the Fed continues to hike over 2019 and they get to rates that sort of sit around 3.25 or so by the end of that period.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.